Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update for Monday, April 9th through Friday, April 13th, 2012 is sponsored by Realtik. All right, let's get right into the mix, folks. This is a chart of the intraday SPY 10 minute. And again, we're looking back at each of the last 4 trading days of last week. Remember, last week we had 4 trading days as the market was closed on Friday for Good Friday. Now, again, early last week on Monday, we started out with that monster, nice, solid rally, just like the previous week. And the difference here, and this is very interesting to note, and something that gave me a great tell for the remainder of the week as I nailed it perfectly, was the market rolled over into the end of the day. If you go back to the previous Monday, the market didn't roll over till Tuesday at the end of the day. So we saw further weakness or an increased amount of weakness in the markets on Monday, regardless of the nice up day. In addition, it was very easy to call and move down second day, third day, and fourth day of last week based on the fact that the market hit this green trend line on Monday. And again, I want to show you why. And this chart I'm going to show you right now is why I've been able to call the market move. We've actually nailed this call perfectly over the last 3 weeks. We had a cycle date, which again began about 3 weeks ago, and that was the major change from the move up in the markets to more of a sideways market, which I called for is a rounded top. And a rounded top is where there's much distribution going on between institutions and the retail investor. You think about all the hype between Cramer and the media and all these analysts upgrading all these stocks to ridiculous levels. That's hype that enables the retail investor to rush back in. They get all excited. Oh, I'm missing all the money I could be making. I haven't been fully invested. Let me go in. They're buying as institutions utilize that to sell. And again, it's a very shady activity, but it's the nature of the markets. And it's better you know how to deal with this and avoid it than get caught up and lose all your money. All right, so again, distribution beautifully over the last few weeks. And again, you can really see it here, folks. All right, just take a look here. This is our beginning of the turn date. All right, now if I zoom out a little bit further, you can clearly see the market had been up until that point in a dramatic move up, unbelievable sharp move up over really since mid-December all the way into, March, mid-March or so. And then all of a sudden, as we surge up, we come right into this area right here, which is the beginning of the turn. And from that point on, see how the markets just start to chop up and down? And they are making little higher highs, but it's a very weak higher high. And again, you're making essentially a break of this pivot top by 50 cents here, this pivot top by a break of 50 cents there, and ultimately if you connect the highs, it tells you exactly where the market's going to pull back. And each time you hit this level, you're actually getting a great correction. I mean, you're actually falling on the SPY about 2 to 3 points in a matter of days, which is unbelievable in terms of scalping and swing trading. If you can nail that every single time, you can make a lot of money. All right, but bottom line is, you get the correction down, then they surge the market up again and get more amateurs in, and then they reverse it again, bring it back down, and then they did it again. This time you came up, and on last Monday we hit that level. And just by history, you can essentially predict that you should sell off all the way back down to the green line. Sure enough, we called for it, you sold off. So just in a micro pattern, last week we called that perfectly for the sell-off in the markets. In addition, the rounded top fully forming here, this is exactly what you call a rounded top, which essentially is the distribution coming in, and you can see that rounded nature of it here. And now, what it looks like it is, you're getting a nice bearish pattern here, in spirit of bear flag, forming, which should take us lower. And that's the conclusion of the rounded top, essentially, as it turns over and begins to pull back. Now, it's going to be a lot of bounces along the way, in my opinion. But nonetheless, I do think the markets should continue to kind of fade off of these levels. The bearish pattern, I mean, this is just a beautiful in spirit of bearish pattern. And again, if you just read this chart, folks, all right, so you have a sharp move down right here from basically Monday afternoon all the way until, Wednesday afternoon. Then you go sideways from Wednesday into Thursday's close. That gives you the in spirit of bear flag. A bear flag by its name obviously tells you there's a bearish move that you should get. Well, you see this chart. If you could just look at this chart, what would you predict from the jobs numbers on Friday that came out? You would say, well, it should cause selling in the markets. Therefore, it probably is worse than expected. Sure enough, the non-farm payrolls come in at 120,000, which is much less than expected. All right, the futures on Friday morning, S&P futures dropped 20 points. We haven't seen that kind of down move on the S&P futures in a long, long time. Now, ultimately, they were smart about this. All right, the government's no dummy, folks. I mean, the Federal Reserve's no dummy. These guys are actually smart, even though I don't agree with a lot of what they do. They essentially, on purpose, put the non-farm payrolls out on Friday morning when the market was closed. This enables a lot of soothing and QE3 talk to come back into the markets over the weekend, therefore trying to cushion the blow of the non-farm payrolls. If the non-farm payrolls were better than expected, and they've done this in the past, they would have released it either Thursday or on Monday, or in some case when the market's open, to get the best market bam for the buck, essentially. So, I mean, these guys are no dummies. They know what they're doing, folks. But bottom line is, the charts would tell you that. One thing that my partner and I preach is that it doesn't matter what the news is. You can tell the news ahead of time by reading the charts. And sure enough, in spirit of bear flag, off the drop, tells you you're going to fall. In addition, the more times you hammer on this green trend line, especially right here, over the last 2 days, it tells you it's getting weaker and weaker and ultimately should break down. So again, it's just a matter of how much they're going to be able to sue that number going into Monday morning over a holiday weekend and QE3 talk and who knows what's going to happen in Europe and Chinese data and so forth, all these other factors that they'll try to cushion things with. But again, as of now, the futures from Friday morning looks pretty ugly. All right, where are your supports on the way down? Well, these trend lines are all representative of the supports. And by the way, folks, you want to get swing trades, you want to rock and roll with the elite here at InTheMoneyStocks.com, then you take the 7-day free trial. There's a 7-day free trial to the Research Center, which again is geared towards swing traders. If you're an investor or a swing trader, the Research Center at InTheMoneyStocks.com is what you want to be in. And there's a 7-day free trial for that. If you want to be more into intraday action, if you want live calls, if you want to see my charts live, if you want to hear me live, if you want to ask questions live, you take the intraday stock chat. And those are all possible through that. And again, that's a 7-day free trial to both of those. And as long as you cancel before it expires, you're not charged the monthly recurring revenue fee, all right? So again, very easy to take it. It's a free trial. A beautiful thing here at InTheMoneyStocks.com. And again, we've cycled ourselves beautifully in preparing for this rounded top, slowly accumulating key plays over the last couple weeks or so. I'd say the last 3 weeks we really accumulated most of our plays as the market was topping here. And now we're ready to rock and roll. I'd love to see this market break down. We'll see if it happens. I mean, as of now, again, it looks like it. And again, it's been a beautiful call ever since the cycle. By the way, the cycle date was right here. And again, it's the key was what a cycle date is. Let me just talk about this a little bit, folks. Is it's a change in momentum or direction, or essentially a psychological shift in the investor perception of the markets. Where again, if you go back and you go to the daily chart leading up into the cycle, you had this vertical nature of the market, and then right here where the cycle begins, and this is the daily chart of the SPY, which mirrors the S&P 500 on a daily basis. This is where you get that little bit of rounded top right here, where it kind of tops out, and then you look for the breakdown. And again, on the daily chart, obviously, we're looking for this level right here at the 137-ish level, okay? 137 level. And again, 136, 137 should be your next major support there. If you take that out, you're going to go right to this little pivot right down here, which is another beautiful area at around 134.50. I think over the next multiple weeks, we easily test that 134.50 level, but you get bounces along the way. No market goes straight up, no market goes straight down. All right, and again, should be a very interesting coming week. We'll have plenty of plays. I have to say, day trading in the intraday stock chat has been unbelievable. I mean, the plays on small caps last week alone were just incredible. All right, I mean, I think on Thursday alone, we were nailing in the morning session, like left and right Valve and all these Chinese little pieces of junk, frankly, but they were running, so we're going to pile on board and make money. If they're running, I'm playing them. Bottom line, you know, and the volatility in this market as we've been going up and down. If you go back to the intraday chart, this movement of up and down is very good for day trading, very, very good, as opposed to a market where it just floats up all day. It's just very poor. So the day trading aspect of things is really heating up, which is fantastic. I think that's going to continue. And then ultimately, if you position yourself on the right foot, on the right side of the markets for the next move in the markets, you should be just able to clean up in the swing trading portion. Okay? All right, what I want to do now is go to a couple key charts out there, which I think are worthy of us taking a look. Number one, let's flip over to the daily chart, and we should take a look at the dollar. I think the dollar was a big, big key last week, and I want to show you this trend line right here, which held beautifully. All right, and again, if you connect this pivot low to this pivot low to this pivot low right here, you can see you came down, you punctured it, you touched the 200, but ultimately you never confirmed below the green trend line, and you never broke the 200 right there. And that gave us a good bias that this should hold up, as I called for my members. My members know this level held beautifully, and I told them that it would hold. And sure enough, up you went. Then you gapped above both moving average, which is a river theory and proprietary methodology point here at InTheMoneyStocks.com. And then you continued up on Friday. Now, as of now, the dollar took a little hit on that non-farm payrolls number. But bottom line is, I suspect that Europe is going to be the driving force here for the next couple months in terms of weakness, and that should hurt the euro, which should actually strengthen. Yeah, the dollar took a hit overall based on the non-farm payrolls, but I still think Europe, we've seen some major problems with yields in Spain, some major bond, stuff going on there. That's going to spread to Italy and Portugal and Ireland and all of them, and they're ultimately going to need a bailout too. I mean, they're going to need something like Greece got, and these countries are actually bigger than Greece, so it actually could be a bigger deal. But you'll see that creep in. You've already heard of it creeping in last week. The mentality of the markets, the psychology of the markets have been changing, and which again is telling you that it's risk on now, essentially, in the markets, as opposed to, well, I should say it's risk off, meaning that that risk is coming off the table. People are running for safety and things like the dollar, and that's why you saw that pop in the dollar last week and pulling money out of risky stocks that have just run to the epitome of their charts. And one good example is Apple, which again was up another 9 and change on Friday. But this again, to me, this chart alone, I don't even care what Apple does. You show me a chart like this, and I will tell you one thing's for sure: it will not go up forever. These bogus analysts upgrading it to $1,000. Where were you when the stock was $400 or $300 just last year? Now they're upgrading it. You got to be kidding me on that front. It's a joke, frankly. Ultimately, the only thing you're doing is coaxing in a couple amateur, no offense, but idiotic buyers at these levels, and then you're just going to get their money taken from them. It'll correct. It will, absolutely. It'll go back to 400, $500 or so, and then it'll have another move up, and maybe then it goes to 1,000. But bottom line is, I think it's reckless to be voicing optimism on Apple at such highs without any major pullbacks. Wait for the pullback; it'll happen. It's just nature. And again, this is a hype stock, and I heard so many people saying, "Oh, Apple's one of a kind." BS. All right, Microsoft was one of a kind back in the day too, and what's Microsoft done for the last 10 years? Absolutely nothing. So again, you can't tell me that nonsense. All right. Bottom line is, Apple's a great company. I love it. I think it's a great company, but there's no company that should go up that quickly, that fast. And again, you can see even last year. I mean, it had a good performance last year, but it's the vertical nature of this move that's out of control, in my opinion, getting a little too far ahead of itself. All right, let's go over to a couple other charts. J.P. Morgan is another important one here. J.P. Morgan closed below the 20 moving average. Hasn't confirmed yet, but again, this chart looks like it's on the verge of rolling over. Beautiful rounded top there. I mean, all the major charts, except for Apple, have really put in that rounded top type feature. And once Apple does and starts to pull back, that's when you will see it start to turn down dramatically. The markets, again, once Apple, JP Morgan, and all the rest of the leaders really turn down, that's when you'll see the bigger correction in this market come in. Let's take a look at gold. Gold did have a nice little bounce on Friday, but got pounded last week. Really, Tuesday and Wednesday were the big drop days. It actually made a new short-term low for this year down here. Although, again, you still have good support right here. This is the beginning of the year low. So you just about hit that anyways on Wednesday, I guess that was. And then ultimately, I still think gold and silver are going to go lower this year. I think you'll easily hit this level and probably take it out by the time the third quarter runs around. All right, again, we're in the second quarter. Earnings are coming out next week. We're starting, I believe, Google's on Thursday, and you have Alcoa coming out on Monday or Tuesday of this week. So earnings are going to actually be an interesting factor as we see the kind of market get a little jittery. Can earnings soothe it? Will earnings come out very strong to help the market keep their gains, or will they add fuel to the fire on the sell side? And again, you're going to hear as these jobs numbers are bad and some other factors are bad and the markets pull back, you'll hear more and more about QE3. They're going to do a QE3. I mean, let's be honest. The Fed knows the market's addicted to it. They're just trying to keep the market in check here, and that's why you've seen Bernanke come out and say it. And then the next week, the Fed minutes said, "Oh, we're not going to do it." They want to keep the market guessing and not too euphoric, and they don't want the market essentially addicted to the drug, because that's what QE policy is. So it's like a drug addict, being hooked on a drug. You can't take it away. Once you give it to the markets, you can't take it away. That's simple. Okay. What else do we want to take a look at? Let's take a look at the USO. USO here, folks. Again, to me, a very weak chart now. Although I have to say, there's no way I could short oil. No way. Not with the Iranian situation. Who knows what's going to happen there. You just don't want to be short oil overnight and wake up one morning to something happening in Iran. So as far as I'm concerned, you're buying pullbacks. Your main pullback somewhere in this vicinity, right and down in here. Probably the 200 would be the ultimate level right here at around the $37 area. All right. What other charts do we want to look at? Let's take a look at Google. Google, again, has earnings. This one was a beautiful short from a week and a half ago, folks. I gave this out to my members. It triggered. The short level was right here. 653 was the short level. And since then, we already have a break-even stop on this play. So the plays are out there, folks. Caterpillar's another one in the money. I mean, you could just rifle some of these off as the market corrects a little bit more. You're seeing more of these come into the money. I shorted Caterpillar at 116.05. It's now trading at 105.87. Another beautiful one there. And I've even been tempted and have shorted some other plays out there as well. So again, you join this 7-day free trial of the Research Center or the Intraday Stock Chat, you'll get all those plays, and you'll get more because I'm going to be putting out more this week. There's no reason to stop now. Let's make some more money. Money's here to be taken as volatility increases. And again, folks, we welcome you here to themoneystocks.com to learn proprietary techniques. I'll teach it all to you. You'll become better than basically any hedge fund manager out there, in my opinion. All right, guys, take care. Have a great rest of the weekend. I hope everyone has a happy Easter. And again, I will talk to you soon. Take care.